Hey everyone, welcome back to Gold Rush Reporter, your trusted source for real talk about silver, gold, and everything happening behind the scenes in the world of sound money. I'm your host, your silver analyst, and today we're diving into something that's catching a lot of attention. The latest developments from the New Orleans Investment Conference and some huge moves by legendary investor Michael Burry, the man who predicted the 2008 financial crash. Now, if you've ever seen The Big Short, you already know who Michael Burry is, the guy who went against the entire financial world when he shorted mortgage-backed securities. Everyone thought he was crazy back then, until he was proven right and made billions. Well, it looks like he's back again, this time targeting what he believes could be the next big bubble, the artificial intelligence boom. Specifically, betting against tech giants like Nvidia and Palantir. That's right. Barry is saying what many investors don't want to hear, that we're in the middle of an AI bubble, and that history might be repeating itself. Just like before 2008, when markets were booming and no one believed things could go wrong, we're now seeing that same kind of confidence in tech stocks. And when confidence turns into greed, smart money starts to pull back. And here's where it connects to gold and silver. While all this high-risk speculation is happening in the stock market, central banks too, around the world, are quietly doing something different. They're buying gold like never before, adding to reserves at record levels. That alone tells us something big. If the world's biggest financial players are turning to hard assets, it's not just about diversification, it's about preparing for instability. Even though precious metal prices may dip slightly here and there, they're still being supported by central bank demand. Gold and silver aren't going anywhere. And for those of us watching closely, these market pullbacks are often the best times to accumulate, not to panic. Right now, I'm here at the gold-silver booth at the New Orleans Investment Conference, and the energy is incredible. People aren't just here to speculate. They're here to learn, to connect, and to understand what's really driving the global economy. Whether it's inflation, currency devaluation, or geopolitical tension, the message is clear. People want real assets they can trust. And stick around, because in the next part, we're going to talk about what's happening inside this event, the conversations, the outlook from experts, and why the sentiment around gold and silver is shifting faster than most people realize. If you're new here, make sure to hit that subscribe button and tap the bell icon so you don't miss any updates. And let me know in the comments. Do you think Michael Burry's new short against AI stocks is a smart move, or do you believe the tech rally still has room to grow? Here at the New Orleans Investment Conference, the atmosphere feels charged. A mix of curiosity, caution, and conviction. You can sense that people here aren't your average investors chasing the next hot stock. They're thinkers, planners, and hard money believers who understand the value of protecting wealth when the financial system starts to wobble. And right now, that wobble is becoming more obvious with every new headline. We're seeing a rise in auto loan defaults and vehicle repossessions, the highest since the 2009 financial crisis. That's a major warning sign. When people start losing their cars, it means household debt is maxed out and the economy's foundations are cracking. It's not a full collapse yet, but it's the same kind of tremor we saw before the last big wave hit in 2008. Meanwhile, most investors are still focused on stock market highs, ignoring the stress building underneath. In times like this, it's no surprise that gold and silver are holding strong. Sure, prices fluctuate, maybe a little dip here and there, but beneath that short-term noise, there's a powerful trend forming. Central banks are still accumulating gold and private investors are buying silver at a steady pace. That kind of behavior shows you where the smart money is going. They're not chasing tech bubbles. They're buying tangible assets that hold real value when the paper markets start to shake. Even the dynamics within the precious metals industry are changing. Dealers are reporting heavy demand for silver rounds, coins, and especially maple leafs, while premiums on silver eagles remain high due to supply shortages from the US Mint. When supply tightens and premiums climb, it means one thing. The physical market is alive and healthy, even if the paper price looks quiet. People aren't waiting for confirmation from mainstream media. They're acting now. That's why it's so interesting to be here at the gold-silver booth. The conversations aren't just about prices or trends. They're about mindset. People are talking about financial independence, about escaping the volatility of fiat systems, and about using gold and silver not as speculation, but as insurance against uncertainty. And what's even more fascinating is that, despite a few price pullbacks, sentiment is still overwhelmingly bullish among serious investors. They know corrections are normal and even healthy. Without them, markets can't build a strong foundation. That's why many here believe the recent dip in gold and silver is not a reason to sell. It's a chance to buy with confidence. As one analyst at the booth said earlier today, every dip in metals is a gift for those who understand the long game. And he's right. Whether it's inflation, rising debt, or global instability, these short-term declines don't change the bigger picture. They just give patient investors an opportunity to position themselves before the next uptrend begins. As the day went on here at the New Orleans Investment Conference, it became clear that one topic was dominating nearly every conversation: the growing fragility of the global financial system and how it ties directly to silver's next big move. Investors here aren't asking if the system will shake again. They're asking when. And that shift in sentiment tells you something important. Confidence in paper assets is quietly eroding. Many speakers, including respected analysts like Rafi Farber and Rick Rule, pointed out that we're witnessing a slow-motion stress test of the global economy. Debt is ballooning, interest rates remain historically high, and central banks are boxed in. They can't raise rates without breaking the system, but they also can't cut them without reigniting inflation. It's a trap. And precious metals are the logical escape route. That's why so many eyes are turning to silver right now. It's not just an industrial metal anymore, it's becoming the barometer for trust in the system. And according to some insiders I spoke with here, the signals flashing from the London Bullion Market Association, LBMA, and COMEX vaults are deeply concerning. Their silver reserves are down to around 5,500 tons, the lowest in more than a decade. That might sound like a lot, but when you compare it to global demand, over 1.2 billion ounces a year, it's a fraction. What this means is simple. If even a small fraction of investors demand physical delivery of their silver instead of settling in paper contracts, the system could seize up almost overnight. This is what Farber calls the paper-silver collapse. And it's not some distant theory. It's already unfolding. Premiums are climbing, physical products are harder to find, and dealers are reporting delays that didn't exist 6 months ago. Now, here's where it gets even more interesting. Silver's role as both a monetary and industrial metal is what makes it so explosive. Unlike gold, which central banks hoard and rarely release, silver is consumed in manufacturing, solar panels, medical tech, and electronics. Once it's used, it's gone. That constant drain on supply is what creates such a tight squeeze in the market, and why, when paper confidence breaks, silver's price doesn't just rise slowly, it erupts. A few investors here have been running the math, comparing the current situation to what happened in 1979 and 1980, when silver skyrocketed from around $6 to nearly $50 in just 4 months. The same setup is emerging again: dwindling inventories, surging industrial demand, and growing distrust in fiat currencies. History doesn't repeat perfectly, but it does rhyme. And the rhyme is getting louder. You can feel it here in the conversations. The quiet urgency. People aren't panicking, but they're alert. They understand that these cracks in the system are not random. They're the result of decades of mismanagement and money printing. And they're preparing for what comes next, not by chasing headlines, but by stacking real, tangible wealth. Silver and gold that can't be printed or defaulted on. As we continue exploring the mood here at the New Orleans Investment Conference, the energy feels different this year. The crowd isn't just made up of typical gold and silver enthusiasts. There's a growing number of younger investors, financial advisors, and even tech professionals walking around asking serious questions about hard assets. That tells me people are waking up. They're beginning to realize that no matter how advanced or digital the world becomes, trust still depends on something real. And that's where gold and silver come in. I had several conversations today with attendees who admitted they were once fully invested in stocks or crypto, but the recent volatility scared them. Many said the same thing. I just want something I can hold. That's a powerful sentiment, and it echoes across nearly every booth here. When people lose faith in systems they can't control, they turn to assets that don't rely on promises, and silver fits that bill perfectly. Now, an interesting topic that came up during one of the panels was how silver might be the bridge asset of this decade. Unlike gold, which primarily acts as a store of value, silver plays a dual role. It's the backbone of our green technology future, from solar panels to electric vehicles, while also serving as a hedge against inflation and currency debasement. This dual demand means that when global economies start investing heavily in renewable energy again, silver's industrial use will explode just as investors are chasing it for protection. That's a recipe for a major supply crunch. Another key insight from experts here: central banks may soon be the next big buyers of silver. While most central banks traditionally focus on gold, some analysts suggest that as silver's importance in energy and tech increases, it will start appearing on balance sheets as a strategic reserve metal. Imagine what happens to the price if that shift begins. It could change the entire landscape of the precious metals market. One investor I spoke with put it perfectly. Silver is the underdog of sound money. And he's right. It doesn't get the same spotlight as gold. But historically, silver performs even better during bull runs. Between 2008 and 2011, for example, gold tripled. But silver went up nearly to 5-fold. That's the kind of asymmetry that big money loves. Even so, the sentiment here is cautious optimism. People know we're heading into a volatile few years. Inflation may cool temporarily, but the debt problem hasn't gone anywhere. Governments can't print their way out of this without devaluing currencies further, and when that realization spreads, silver could easily become one of the most valuable assets to own. And standing here at the gold-silver booth, seeing people walk up, ask questions, hold real bullion in their hands, it's a reminder of why we're in this space. This isn't just about profit. It's about preserving what's real in a world that's become increasingly unstable. As the New Orleans Investment Conference wraps up, the message from everyone here, from veteran analysts to new investors, is loud and clear. The world is changing fast, and real assets are becoming more important than ever. Paper wealth, digital speculation, and government promises can vanish overnight, but gold and silver stand the test of time. Walking through the halls one last time, I could feel a sense of both concern and confidence. Concern because people know the financial system is fragile, and confidence because they're taking action now rather than waiting for the next crisis. Whether it's Michael Burry warning about inflated markets or ordinary investors quietly stacking silver, the signs all point in one direction: a shift away from blind faith in paper money and toward tangible value. The conversations I've had here at the gold-silver booth have been inspiring. So many people shared their stories, how they started with a single silver coin, learned about sound money, and eventually built true financial security. And that's what this is all about. It's not just numbers on a screen. It's about protecting your hard-earned wealth in uncertain times. Right now, silver isn't just a commodity. It's a signal. A signal that trust is fading from the system. A signal that people are taking control of their own futures. Every major cycle in history has one of these moments, when the crowd still doubts, but the smart money is quietly preparing, and that's exactly what's happening now. Before we close, I want to thank everyone who joined me here at the conference and everyone watching from home. Remember, knowledge and preparation are your greatest assets. If you understand what's coming, you don't need to fear it. Instead, you can position yourself to benefit when others are caught off guard. So as we move forward, keep your eyes on the fundamentals, not the hype. Watch what the big players do, not what they say. And most importantly, stay grounded in reality. Gold and silver have been real money for thousands of years, and they'll still hold value long after the noise of this financial era fades away. Thanks for watching Gold Rush Reporter. If you found this breakdown helpful, make sure to hit that like button. Share your thoughts down in the comments, and subscribe for more real-world silver and gold analysis. Until next time, stay informed, stay prepared, and as always, keep stacking.